Hello, I'm David Lin, Head of Investment Research at Altair Advisors. Today I want to share some takeaways from our latest Altair Insight Quarterly Commentary, which covers an eventful period for markets amid significant geopolitical challenges. The Iran war is projected to slow the growth of the global economy, mostly due to higher energy prices. We believe this will have a relatively brief impact, as both sides likely want a quick resolution. Longer term, though, we see the further development of AI as the bigger economic story. Robust AI-related spending has continued to start the year. The forecast is that more than $600 billion will be spent on the AI build-out in 2026 alone. Much of that spending will be by tech giants for data centers and other infrastructure. But smaller companies are also expected to spend tens of billions of dollars for AI-related capabilities this year. We're not alone in thinking that the Iran war will have a limited impact on the global economy. The stock market also appears to share that view. Both US and international stocks fell sharply after the war started at the end of February, but both have strongly bounced back, as US stocks have already set all-time highs. The key reason for our optimism in the stock market is that corporate revenues and earnings are both expected to grow briskly in 2026. International stocks also stand to benefit if the US dollar continues to weaken. After rising in March because of the war, the dollar declined by about 2% in the first half of April. Inflation in the US jumped by almost a full percentage point in March to 3.3%. That increase was almost entirely due to higher energy prices. Not counting energy, the inflation reading was much more muted. If history is any guide, we will take several months at least for prices to come back down to pre-war levels. Part of that move has already happened. Oil prices are more than 25% below their peak in March. The Federal Reserve is concerned about the job market, but with high inflation, it will likely hold off on interest rate cuts for a while. We think the Fed may have room to still make a rate cut later in the year. We do not think the Iran war will be prolonged or that it will have a lasting impact on the global economy or asset markets. We believe the AI growth story will be a stronger contributor to economic expansion in the US and globally. Inflation will likely be elevated for a while due to higher energy costs, but we still envision an interest rate cut late in 2026. You can find our full commentary on Altair's website. Thank you for watching.